Across America, people have been feeling the pinch when it comes to those rising costs. According to new numbers from the Bureau of Labor and Statistics, inflation rose 9.1% in June, which is higher than what was expected. So this morning, we're going to go ahead and share some ways that you can maybe save and survive this economy. Here with us now is Kyle Whipple. He is a partner and advisor with Custom Wealth Solutions to share some tips. Good morning, Kyle.
Good morning. How you doing, Allie?
I am wonderful, thank you. I know we're all just kind of feeling the burden right now. Gas prices, groceries, and then summer. You want to plan your summer vacations. How can people save right now?
Yeah, I think having a plan is really important. When things were flush and maybe you weren't spending as much and costs were down, it was easier to just kind of fly by the seat of your pants. But when you look at prices being so high, you had just mentioned that inflation, at least at an annual rate, was just over 9%, which is the highest it's been in 40 years. So it's really important to maintain like good cash flow. If you've been living paycheck to paycheck, you might want to pull back on the Starbucks or the 7-Eleven runs or whatever it is, your poison is. But I think one of the biggest things we found is that people need to have a plan moving forward so that if prices continue to rise, they don't find themselves stuck, month in, month out that way.
So what's the best way for people to figure out that plan?
I think one of the easiest things you can do, there are plenty of apps that you can sign up for that you can hook up your credit cards and or bank account to, and it will track all your spending. Some of the wealthy people that we've worked with over the last decade weren't necessarily people who made budgets, but they did track their expenses. And so they could tell you, this is how much we're spending on gas, this is how much we're spending on cell phones. And when you can fill that out, it helps you realize maybe I don't need that extra drink if I'm out with friends, or maybe, we want to do something closer to home rather than going far out, or just simply get a notebook. And every time you spend money, whether it's cash or your card, you just write it down. It starts to help you understand where your money's going and where your big costs are. And it's a little bit easier to pare your costs back that way.
Now, what about our retirement and savings plans? Because right now those aren't doing too hot either.
Yeah, so one would be stay the course. It's the old adage, you want to buy low, sell high. Well, right now things are quite down. And so there's a great opportunity to buy the same dollar amount that you put in every week, month into your retirement plan. You're buying more shares because shares are lower right now. You're buying more shares as the market is low. You have an opportunity to rebound. One of the big things that we've seen, though, that people need to be considering, if you're thinking of retiring in the next couple years and you have a pension and you might have a lump sum option, as interest rates go up, lump sums go down. And so right now, based on what we've seen, we think people who hold off retiring in another year or two could possibly give up 10 to 20% on their lump sum in retirement. So again, a plan, looking at what you have coming, how interest rates and inflation are going to affect those things. It's really important to make sure that you're planning ahead so you don't find yourself in a year or two going, oh, shoot, maybe I should have made this decision earlier.
You talked a little bit about some short-term planning. Is there anything we can do for the long term?
Yeah, I think making sure you know what you're putting away. I think leave a little bit of margin in terms of your maybe giving, the way that you're investing. So right now, everyone wants to take what they have and go, well, this much is going to go here, and then we're going to spend this much, and we're going to have fun, and this is my going out budget. You might want to pare that back 5-10% so you can push some of that into a savings, whether it's $10 a month or it's $1,000 a month or $10,000 a month. Long-term planning means, hey, I'm going to build that cash position. And if our inflation rate slows down, I don't think we're going to see prices go back, but I do think we'll see the rate of inflation slow down. Okay, worst case scenario is now you have a pretty good cash position for emergencies and rainy day funds, so you're not having to go into credit card debt and things like that.
And finally, where can people go to learn more about Custom Wealth Solutions?
Yeah, our website, customwealthsolutions.com. They can read our book, Retirement Blueprint. Any of those have a lot of great opportunities for people to figure out, what do I need to look out for coming forward?
All right, Kyle Whipple, thank you so much for being here and for those tips. We appreciate them.